Welcome to Right Size Your Life. I'm Jenna Shimoleski, Seniors Real Estate Specialist with ERA Reardon Realty. Again, we are talking more about reverse mortgages. Again, we saw all those commercials on TV, from the Fonz to
Magnum PI.
to Magnum PI for reverse mortgages, which just invoked so much trust in a good financial product. Nothing like a good mustache to get you a good financial product. But we are here today to dispel some of those myths, and there's actually some good financial applications for them. Today, I have my good friend Beth Ploof from At Home Mortgage. Hi, Beth.
Hi, Jenna. Well, it is No Shave November, so that mustache might come in handy. I
There
guess.
we go.
Yeah.
There we go.
Mm-hmm.
No mustaches here today.
I don't have a mustache.
Thank goodness.
Right.
We've already been to the salon. So, just a quick recap, Beth. What is a reverse mortgage?
So a reverse mortgage is a way to tap into your home's equity. It's just like a forward mortgage in that it's a lien against your home. And the good news about a reverse mortgage is that you do not have to make payments.
Great. So who qualifies?
Anyone who is 62 years and older and has enough income to be able to cover the property taxes, homeowner's insurance, and maintain the home.
Great.
Yep.
So you did a great job at sharing the myths. And if you haven't seen the show, make sure that you go and look the last show, but briefly explain what are the myths of a reverse mortgage.
Absolutely. So I think the biggest myth, the misconception about a reverse mortgage is that the bank owns your house. That when you get a reverse mortgage, you sign over the title and you no longer have ownership, which is 100% not true. The bank just takes a lien on your property. So it's the exact same type of lien that a first mortgage would have, a forward mortgage or a normal mortgage. Same type of mortgage of that. It's just a lien against your property. You still hold title.
Great.
Another myth is that you won't have anything to leave to your heirs or to your children after you've left, which again is not true. So the mortgage does have to be paid off, just like a forward mortgage would, right? In order to sell the house, your heirs would have to pay off a regular mortgage. So, your heirs would have to pay off the reverse mortgage as well. There's a little bit of myth in that it's tough to do that because the balance on the mortgage is higher than the value of the house. Well, we were lucky that some laws were enacted not too long ago to stop that from happening. So your heirs never have to pay back more than what the fair market value of the house is. The mortgage could be more, but they only have to pay back the fair market value.
Great.
Yep.
Awesome. So last show we discussed opportunities to help keep one at home
Sure.
to age in place.
Yep.
So now let's talk about opportunities if somebody does want to move forward, how a reverse mortgage would be applicable.
Yeah. So now we're talking a little bit about a reverse mortgage for purchase, right? So we're no longer talking about the house that the borrower lives in. Now we're looking at buying another house. So some of the reasons that you would want to purchase a new house, we talked about modifications. One of the things that we didn't really talk about is 2-story to 1-story. I mean, you can't really modify a house from 2-story to 1-story, right? So let's look at that perspective where we can use a reverse for purchase to downsize from a 2-story to a 1-story. Maybe from the current location to a community in which you hold title or own the property that you're moving into. And often not thought of one too is maybe to relocate closer to children. You can move from another part of the country to another part of the country to be closer to your family. And not use all of those assets. You're going to sell your home. Do you want to keep some of those assets and not put everything into the next house to pay cash? You can take out a mortgage and never have to make a payment on that mortgage and keep that cash from the sale of your home.
Absolutely.
Yeah.
So I saw so many opportunities when I worked in independent living retirement community. So this would have been fantastic to have you available then. Oh well, but
I was too young.
So many older adults they don't want to deal with the showings and getting everything done and having to leave the house back and forth for the showings. And so they would love to do consistently is be able to move into the new residence, whether it's smaller house, condo, retirement community, long-term care. And so it was so nice to be able to get them in and get them settled.
Sure.
And then be able to sell the house and get the proceeds of that to compensate for that. So often I've seen that application.
Absolutely.
And yeah, I would see people relocate. Maybe they had their career here.
Sure.
They raised their kids here. The kids are still here, but then they wanted to go to Florida. They wanted to go to Arizona. And now we're talking, where things are getting a little tougher and they want to be back with the kids.
Sure. That does happen a lot.
That is so frequent. So
Sure.
I can completely understand that.
Grandkids too. Grandkids is one sure way to get them back.
I've got 2 grandbabies, so
yeah,
I get
they'll
it.
come back for that.
Yes.
They'll come back for that.
They're the cutest, and so I have to be close. Absolutely. So one of the things that we've talked about too, so we've been focusing on reverse mortgages, but I think that this other program is also smarter. So you and I have talked about the opportunity with a forward mortgage where you can actually purchase a house for your parents, or if you are the parent and maybe you've got a disabled child, there are opportunities with that where it's not the traditional 20% down that you need to do. Can you share with us a little bit about that? Because I think that falls right in line with what we're talking about too.
I will, Jenna. And let's first start why this is a big deal, right? So in the mortgage world, you can only own one primary residence, okay? That's our rule. Well, if you're purchasing a home that is not your primary residence, the terms of the mortgage change, right? They're not quite as nice as if it's a primary residence. Like you said, the down payment requirement is higher, the interest rate is higher. So having the ability to purchase a home for your child, your disabled child, or your disabled parents helps out because we're going to call that a primary residence. So you get the same terms as you would if you were buying a primary. Lower down payment, lower interest rate. So that's a little piece that is sometimes forgotten that it's nice to think about and bring to the surface every once in a while.
Which is great. And so when you're saying lower down payment, what percentage do you typically see in that?
5%.
5%.
You can go as low as
20%.
5% instead of 20 if it was an investment property, because otherwise we'd call it an investment property and it's going to require 20% down.
That is absolutely amazing.
Yeah, probably a interest rate at least 1%, if not 1.5% lower too. So.
Oh, that's amazing too.
Yeah.
So good financial application there.
It is.
Amazing.
It is.
Okay. Well, thank you for your wealth of knowledge, Beth.
Anytime, Jenna. Anytime.
I appreciate you. And if somebody wants to learn more about a reverse mortgage or a forward mortgage, how do they get a hold of you?
They can call me at 517-812-1866 or email me, Beth, at homemichigan.com.
Perfect. Thank you again.
Thanks, Jenna.
And thank you for joining us as well. I'm Jenna Shimoleski, Seniors Real Estate Specialist with ERA Reardon Realty. If you'd like to learn more about the equity that you have available or about purchasing a home for your disabled adult or child, I'm happy to help. You can reach me at 517-937-5232, or you can email me at realtorjennacares@gmail.com. Thank you for joining us and have a great day.